Welcome to the University of Michigan Dentistry Podcast Series, promoting oral health care worldwide.
By design, a look at the changing scene in auxiliary utilization, business office procedures, facilities design, and contemporary trends in the management of a modern dental practice.
There are two basic methods of obtaining equipment for a dental office. The dentist must either purchase the equipment or rent it from a leasing company for a specified period of time. Here to discuss the pros and cons of the two methods is Mr. Paul Rick, Area Manager for a national corporation which provides both leasing and dental financing services. Paul, what does the recent graduate look for in financing?
Well, generally speaking, we would be looking for providing funding in the area of capital expenditures, which would be for equipment, for office furniture and equipment, supply items, leasehold or remodeling expenses if that funding would be required, as well as operating capital. And in the area of a practice purchase, we could provide some of the funding relative to goodwill items.
Within this particular arena of financing, do you have a certain formula that you work under to allocate given amounts of money to leasehold, given amounts of money for operating capital and so forth?
Yeah, basically we run a formula similar to 50%. In other words, now from the total amount borrowed, let's say for practical purposes, if you use an example of a $60,000 loan, we could provide up to $30,000 or 50% of that total loan amount, which could be for remodeling or what we would consider intangible items.
Getting off to a good start in practice is a critical thing. I think we'd all agree. What would you consider to be a very sound financial base for a young practitioner?
Well, part of our service and part of the programs that we offer, we work with the student setting up a practice to create a report card, a financial report card for the first at least 6 months up to a year and maybe 2 to ascertain the expenses and the income derived during that period of time so that the practice can be started on a sound financial base.
This is a pro forma then that you're talking about?
That is correct.
For an individual to do a projection?
Would be a projection, that's right, of income and expenses. The first 6 months obviously are the critical time in any type of a business, and we're talking about a business here.
How would that recent graduate go about getting that information? How can they really say, I know what my electrical bill will be, I know what my supply costs are going to be? How do they actually get down to the business of developing a pro forma?
We sit down with the student and we will work out those numbers. Many of the numbers we know from practical experience from working with other graduates that are setting up their practices.
It gives you an idea from past history what's going to happen with this individual in this particular area in the state of Michigan, for example,
that is
or
right.
wherever?
Sure. And we do work with a pro forma, be it a lease situation or financing. Makes no difference. We would sit down and work out that pro forma.
So that you get a general idea of what their expectations are and their goals are. Is it really a goal-setting procedure?
Primarily, no. It's strictly a financial report card so that we can tailor a payback or paying back the loan or the lease in accordance with the cash flow that we can expect to see generated that first year.
With the thought on operating costs and the pro forma, do you find that recent graduates assign themselves an appropriate salary?
By and large, sure. The salary requirements obviously are going to depend upon the individual's marital status, his own socioeconomic position.
Do you find that frequently people underestimate or overestimate what their salary should be? Do you offer them some assistance on that?
We offer them some assistance, but by and large, basically they know what they're going to have to live on for the first 6 months to a year, and that's primarily what we're trying to achieve at that stage of the game.
I'd like to, for a moment, if we can talk about your loan services? You're a private source of funds as opposed to a banking institution. Why would someone come to a private company like yourself as opposed to a bank for a dental loan? What would motivate them to do that?
Well, I guess primarily we're talking about some of the services that we offer that we've just been discussing. In addition to that, we provide some services that other institutions do not. I would say specifically, perhaps in the area of collateral requirements. We probably are perhaps less demanding than most other institutions in the area of collateralizing a loan.
What would be some examples of collateral that a bank would require that you wouldn't?
Well, primarily it would be in the area of personal belongings, car, house, whatever, you know, would have some tangible value.
Do you require a credit life insurance on that loan of the dentist?
Primarily we provide that in accordance or in keeping with our programs. That is part of our program. We would provide that.
Is it a mandatory requirement that someone have credit life insurance on their loan?
Well, most other institutions require it. We do not because we do provide it. The cost is minimal to us.
Are your rates for loans similar to the bank or more or less in terms of terms, rates, paybacks, that sort of thing?
Well, we feel that certainly we have a lot more to offer in terms of flexibility. In terms of rates, specific rates, we probably are somewhat higher than most other institutions. When I talk about other institutions, I guess primarily I mean banks.
We're in the fall of 1980 today. What is the current rate that you have on dental loans?
Our effective rate today is 15.5. And the other institutions that I'm familiar with locally are talking right around 14.5 to 14.75, a floating type rate.
All right, so you're a little bit, not much, interest rate-wise, more than the bank.
Correct.
Tell me what would motivate a person to pay that percentage more, and how can you be flexible for that person? Collateral you mentioned.
Okay, the other area would be in accordance with structuring a payback in accordance with that cash flow. In other words, obviously, if you're talking about a loan and whatever terms you can work out, sometimes those terms are not flexible enough to create payment structures that will increase as your income increases. And we can do that. We have infinite flexibility in structuring that type of a program.
Let's take the whole payback period. What is typical for the beginning practitioner? How many months will they have to pay back a loan?
Well, for the new practitioner, we generally recommend 72 months. If it would be a larger type loan, we would go up to 84 or 7 years.
All right, so you can offer a longer period of time than some banks. Some banks are offering 60 months.
That is correct.
That's one dimension of flexibility. I'm wondering about this business of delaying payments, deferred payments. What would be a typical flexibility that you could offer banks, that you could offer that banks couldn't? For example, I'm aware of one major bank that will defer payments entirely for 3 months and then pay interest only for the last 9 months of the first year and then interest and principal thereafter until the loan is retired. How would that compare with your flexibility?
That would be fine. In many cases, flexibility like that or an arrangement like that might be fine except for one thing. If you're talking about a fairly substantial loan, and if you're talking about this type of a deferment, what you're actually doing is you're probably going to reduce the total term from a 60-month payback to 48, which can make those principal and interest payments fairly heavy starting the second year. And maybe the practice is not developed to support that type of a payment by early in the second year.
Are you saying if you offer that flexibility that your company would reduce that payback period to 48 months?
No, we would not. We would not do that. Other institutions will do that, as I've been told. I can't speak for other institutions.
Well, they're certainly individualized.
Right.
For sure. I'm thinking in terms of other aspects of a loan relative to when you would release funds and make funds available to students. Is that part of your flexibility and your ability to tailor-make a loan to an individual? Thinking of the student that hasn't finished their graduation requirements, the boards, that sort of thing, yet they need capital, you know, for purchase of equipment or a practice that's for sale. They have to buy it now, even though they haven't finished their boards and so forth. Leasehold money to get building underway, that sort of thing. Can you be flexible in that area?
Sure. Basically speaking, though, what we would ask for would be a cosigner or a grantor that would guarantee the payment of the obligation only until such time as the boards were passed. In other words, we could make funds available, but we would require a cosigner until the boards were passed and everything would be, you know, ready to go.
What are some typical amounts that recent graduates are borrowing these days?
Well, gee, that varies quite a bit. I would say anywhere from 40,000 on up.
Is there some typical amount that you're seeing in recent
Well, I would
years?
say the average size package where we're talking about now providing the remodeling and providing the operating capital, probably around 65,000.
A typical figure. Is that
Yes,
for
sir.
a one operatory office or two?
That would be 2 operatories.
In the basic support areas,
Right.
lab areas, and so forth.
But again, I think a primary cost factor now is in the area of leaseholds, and remodeling is just, you know,
It's growing and growing.
growing
Never ending.
dramatically.
Are you finding that young dentists are purchasing practices or going into associate agreements and trying to get equipment, you know, to support an associate practice, or is the owner providing equipment, or are they starting from scratch in solo practice? Do you see any trends?
Well, they're starting from scratch in a solo practice. Of course, we're seeing some practice purchasing situations also, which on occasion can be a super method of, you know, the fellow, you know, getting himself set up, taking over a practice.
I'd like to touch on the issue of leasing dental equipment, but first, this management fact. Paul, a good deal has been written about leasing equipment and office furnishings in the last few years. Could you explain how leasing plans work?
Well, sure. In essence, when you're entering into a leasing arrangement, what you're actually doing is renting the use of that equipment for somewhat close to its useful life. The leasing company basically has title or owns the equipment and is leasing it to you or renting it to you on a monthly basis.
How do you go about obtaining that lease and picking out equipment and rates and all of this sort of thing that come into play here?
Well, obviously, once you've picked out a leasing company and you're confident that the leasing company can provide the funding and the equipment that you desire, it's just a matter of going and working out, arranging for the purchase of the equipment that you wish, and having the leasing company pay for it.
So the dentist does have a choice of what equipment that they can select,
Sure.
the furnishings they can use?
Definitely. Everything is selected by the dentist.
And you provide the funds for that,
That is correct.
and they pay a rent as opposed to getting a loan from your company.
Right.
Why would they do that?
Well, primarily it's in the area of tax advantages. Many financial advisors in this day are recommending leasing as a sound financial vehicle to establish your tax write-offs.
Relative to the recent graduate with very little resources typically, would that be a financial advantage tax-wise for them?
Well, sure it would, Joe, because basically what we're talking about now is the ability to structure a lease payment program in accordance with not only the cash flow, but the tax advantages when the income is at its highest point. In other words, in the beginning of the practice, the rentals will be low, so that hence the tax write-offs will be low. As the income grows, the rentals grow, and the tax deductions grow. So it's a uniform program.
Would you recommend someone leasing over purchasing equipment?
Sure. Now, I definitely would. Again, we're talking about a tax bracket. From a tax situation, anyone in the 35 to 40% bracket or better can benefit after tax cost when leasing rather than purchasing.
Why?
Well, only because what you're doing is Uncle Sam allows you, when you purchase something, you can deduct depreciation from your taxes and you can deduct interest cost. Okay? When you lease, the whole amount, including the cost of the equipment, is written off as a tax write-off. Now, not only that, Uncle Sam does not allow you to defer depreciation. You can accelerate it, but you cannot defer it. In leasing, what you're doing is postponing those tax write-offs to the periods of higher income.
You didn't mention the tax credit, though. If someone buys new equipment, you get a 10% tax credit in the first year of useful life, if I recall correctly. Where would that come into play?
Okay, well, the tax credit, yes, primarily, technically, it would belong to the leasing company. However, leasing companies do have the ability, and ours does, in all cases, is transfer that tax credit to the dentist, because obviously that cost would make leasing, fairly costly if you give up that tax credit.
If at the end of the lease, and I'm not sure what period of time you're talking about useful life of equipment, are we talking 5 years or 7 years? Or?
Well, in standard accounting practices, they look at the useful life of dental equipment at around 8 to 10 years.
8 to 10 years. At the end of that time period, can the dentist buy that equipment for some
Sure.
price?
The equipment can be purchased at a fair market value. Now, that normally, in past experience, has been around 10% of the original purchase price.
And that's acceptable to IRS?
That is correct. So that we are still talking about a true lease, and in the opinion of the Internal Revenue Service, it does qualify.
What do you mean by a true lease?
A true lease is one which you are actually making use of the lease as a tax vehicle, but there are certain regulations to conform to in order to obtain those tax advantages. And we did discuss one, which was, of course, the purchase option. If I were to say to the dentist after the end of the lease period, you give me $1 and the equipment, I will pass the title to you. In essence, we have a quasi-lease, which is not a true lease.
Meaning that you could get all the advantage tax-wise of renting and then in the end pay a small token payment and actually have purchased that all along.
That is correct.
And used it as a tax evasion.
It becomes
tactic.
evasion then, right?
At what, you mentioned $1, that's a rather...
An abandonment type situation.
Yes. At what level does IRS get uncomfortable?
Anything below that 10% number. But again, it's not a question of being uncomfortable. It would be an appraisal type situation. So that, like a car or any other mechanical type, if you abuse it, it can have less of a value.
So you actually have a dental equipment company come in and establish what the fair market value is?
That is correct.
Documented appraisal of the equipment.
And that will be at the dentist's request.
So the IRS would be comfortable with that?
That is correct.
So we're talking lease periods of 8 to 10 years, or useful life of equipment 8 to
Right.
10 years. But what are the lease periods? Do they match that?
No, the lease period, in order again to conform to Internal Revenue Service, you cannot enter into a lease for more than the useful life, so that our maximum lease period is 7 years.
7 years.
So we are conforming to those requirements.
Can you give me the rate that is charged for leasing equipment and furnishings?
Well, the rate is a rental factor, and that rate or that rental factor varies with the length of the time and also in accordance with how the rentals would be structured. But by and large, the rental factor in terms of interest will be very close to that should you elected to purchase it or obtain a loan.
Give me an example.
Well, if you, right now, our rate would be $23.50 per thousand per month on a 60-month term, which would be level payments for level rentals for 60 months.
So if someone leased $30,000 of equipment for each $1,000, you're going to pay $23.50 per month.
That is correct.
To use your money.
That is correct.
I wonder, in terms of that 7-year period that the lease runs, I'm a private practitioner. Along about the 5th year, some new equipment comes on the market, and I'd like to make a change. I can be more productive, maybe it'll make my work easier, whatever. How do we work that out? Could I come and say, Paul, I'd like to change equipment now and not go to the end? Can I do that?
Sure, sure. Now, technically speaking, a lease is a non-cancelable agreement, but things can be worked out that, you know, what we would do is rewrite a lease or change the equipment. It can be done.
Does that happen?
Not too frequently. Not too frequently. It has happened once or twice, I think I've been involved in it.
I guess I'm wondering that by your statement, that would imply that dentists, in fact, buy equipment or lease it, and the turnover rate goes to the full life of the equipment or beyond.
Sure.
Is that true?
Sure.
Dentists don't change over to newer equipment in less than 8-10 years?
Well, I think what I'm finding is additions to, not replacement of. In other words, if you start with one operatory, it's not going to be too long and another one, and then a panoramic machine, this type of thing. No, I would say that generally speaking, the equipment would be kept for longer than that period.
So as one modernizes, let's say add-ons, you just simply are leasing more equipment and
Sure.
add on to the original
Sure. Sure.
situation.
It has a lot of flexibility, though. Obviously, you're protected against obsolescence, but if you do want to change, you can do that.
What about repairs?
In the area of leasing, the repair would be the responsibility of the dentist.
What about damage?
Well, we provide all risk non-depreciating coverage on the equipment as part of our program, as part of our lease program, so that if the equipment would be damaged, we would take care of that.
Is there a normal use damage? For example, if I'm coming to the end of the lease period and it's all dented, you know, from abuse, perhaps, in the office. So here's your equipment, and it's rather unsightly, maybe even in some dimension unworkable. How does the company, leasing company, view that?
Well, obviously it would affect the fair market value of the price if you opted to purchase it. If you're saying you're just relinquishing all, you don't want it anymore, come and get it, we would just come and get it.
I see. I'm wondering, considering both areas that we've been talking about, buying your own equipment, financing it, you wear two hats. You know, you're a leasing person and you know, finance, and so you have both routes within your office to go. What would be your advice to a recent grad? Would you advise them to buy or to lease?
Well, most dentists, obviously, when they're setting up a practice, would have their own financial advisor. And if I talk to 10 advisors, 5 will recommend they should lease and 5 will say they shouldn't. Personally, I believe in leasing because Uncle Sam's tax structure makes it so. If you can see an end to inflation, which personally I can't, and if you can see a reduction in personal taxes, then I would certainly take a look at leasing and say, well, maybe it's not the best vehicle. But as long as our current economic situation continues, leasing is the most advantageous way to go.
You've been talking about the IRS, but hadn't mentioned anything about local tax structures. I'm thinking in particular the issue of personal property tax, where cities look at businesses' personal property and they assess tax on that. I would assume, and correct me if I'm wrong, that if I leased my equipment from you, that would not be my property and I would not have personal property tax on that.
Well, that's a technicality, but basically that tax is passed to you. You would end up paying for it.
Are you actually taxed by
Sure.
the city, and then you pass that along to me in terms of your rate?
That is correct.
So the
well, no, it's not in terms of the rate. It's in terms of a monthly or an annual charge.
A surcharge for
Right.
tax? So I can't get around the local personal property
No,
tax
sir.
in any way?
No, sir.
I'm going to try everything I can. What about some words of wisdom for students that are in their last year of practice, perhaps their last semester? You know the financing scene, being active in it each and every day. you offer some words of advice, student?
Yeah, what I would strongly recommend is to be comfortable with a financing program. Again, rate or cost is certainly important, but there's a lot more to borrowing money than just, well, what is your rate? Because we're talking about terms, we're talking about flexibility, a sound financial base to provide operating capital. When you're starting out in a practice, you have to be comfortable for the first 6 months. And I'm talking about generating the income. The income does not come that quickly, but you have to have a source that can help you get through that first 6 months. Look at that. Look at requirements of collateral. What does the institution expect of me in return for that money? Those are, some of the things, and ask a lot of questions.
Thank you very much, Paul. Our guest has been Mr. Paul Rick, Area Manager for a major dental financing and leasing corporation. Join us again for other programs in the By Design series that deal with current topics and trends in the management of a modern dental practice.
You've been listening to a presentation from the University of Michigan School of Dentistry, which is dedicated to supporting open learning and open educational resources. This recording is licensed under the Creative Commons. It may be reused and redistributed for nonprofit use. Please attribute materials to the University of Michigan School of Dentistry and redistribute under this same license. For more information on how this and other University of Michigan School of Dentistry recordings may be used, visit www.dent.umich.edu/license.